something that is bad for growth.
Yes.
Bad for a democracy, bad for the economy. So you want to reduce it, but you do not want to reduce it at the expense of reducing growth.
You don't want to bring everybody down to a lower level.
You're right. The idea is try to lift everybody up. So you need to look at the economy and find, if you go from the overall concept that a rising tide lifts all boats, why do some boats go up higher than other boats, and why do some boats not come up?
I mean, look at, if you're invested in equities, you've done better since the Great Recession than if you haven't been.
That's right. But are there rents out there? Are there places where people are getting beyond which the market would otherwise give them? Things like in urban areas, land in urban areas, things like the real estate development industry overall, by the way, is a heavily undertaxed industry. And there are places where CEO salaries, here's one of the interesting things about Bernie Sanders' wealth tax on salaries. In some cases, you can imagine that the CEO salaries are not really set by the market. Okay? So you could tax that and it would not necessarily be negative for growth if you could find those places where they're not. However,
good luck.
Right, okay, all right, but let's just the theoretical framework. If reducing CEO salaries will not raise the janitor's salary because one doesn't necessarily arbitrage the other. There may be more money around if you pay your CEO less, but you wouldn't pay the janitor more if the if the supply of labor for the janitor position is not higher or lower.
What about a new higher level of income tax added on to the top? Because if you're just taxing people more over $1 million, that doesn't really hurt the economy, does it? Because it's not like they were spending all of that money straight away that year. It just reduces perhaps how much they're able to save for the long term.
So, Wolf, you've done a great job at pegging the great unknown. There is almost certainly a Laffer curve out there. There's almost certainly a place where you reduce the distance, the incentive for work if you raise taxes. The trouble is we don't really know at any one moment where we are on that Laffer curve. And what you can do is you can kind of grope your way in the dark here. You can feel your way in the dark and say, okay, if I go up a bit on this, what happens here? You know, there's a lot of talk about raising the taxes from the Obama era would destroy growth. It didn't destroy growth. And by the way, the lowering the corporate taxes has not created a massive amount of incentive to invest. We may not have been at a critical point on the Laffer curve when it came to capital investment. So you can try to grope your way around and feel things out.
It has done things to make us more competitive versus other nations.
Absolutely,
in
absolutely.
Tax cuts.
No, that's accurate. And had some money has come back. There have been positive effects. What there hasn't been a massive positive effect is on equipment spending. And so you may come back and say, you know what?
Uncertainty because of what's happening both with the economy around the globe
that
and
could
with
be
the trade war.
That could be a big part, Becky, for sure. However, we may not have been at a critical point where the tax was the wedge between the decision.
Corporations already had so much capital.
Right. Or it may have just been that, you know what, the tax at that point is a small part of it. You're right, though. We do not have a pure experiment because of the trade war.
Okay.
Had we left the trade war where...
every time we thought we've had a pure experiment, you can point to some other external
Exactly.
factor.
Or what about the tax revenue from the tax cuts, in that we had a huge increase in spending, so we don't really know what that effect was. You're right, Becky.
All right, stick around, Steve. Let's continue this conversation. For more on the impact of taxes on income inequality, let's bring in two more voices. Joining us right now is Sarah Anderson, Institute for Policy Studies Global Economy Project Director, and Aparna Mathur, who is the American Enterprise Institute Economic Policy Studies Resident Scholar. Welcome to both of you. Sarah, I'm going to start with you. A lot of talk that we just went through about how this could be misguided. Why do you say go ahead?
We're talking here about a proposal to increase the corporate tax rate on companies with really extreme gaps between CEO and worker pay. So the wider these gaps, the higher their federal corporate tax rate. And I think this is a sensible solution to a problem that companies have just not been willing to deal with themselves.
But what is the sensible solution?
To increase the corporate tax rate on companies with extreme gaps. This would give an incentive to narrow these gaps, which a lot of business research has shown is bad for business. It contributes to lower employee morale. It sends us a message that the contributions of people throughout the company are infinitesimal compared to what they are at the CEO level. And I think we all know that's not true. It would be good for business to narrow these gaps. And if companies refuse to do it, they would have to pay more taxes, and that money could be used for social goods to help reduce inequality.
Aparna, what do you think? Would this be good for business?
100
So my problem with this proposal is simply that, it's not directly raising taxes on CEOs. What it's doing is that it's raising the corporate tax rate on the company. And as economists, I think what we've tried to show over the last several decades of research is that the corporate tax is actually borne by a combination of factors, and one of those factors is workers. So if you have high corporate taxes, companies have lower incentives to invest. They have less of, funds to invest in profitable projects, which leads to low capital formation, and that in turn affects worker productivity and worker wages. So my problem is, if you're trying to address income inequality, a direct tax on CEOs might make a little bit more sense than a tax on the company as a whole, because the company is not the CEO. Company is shareholders, it's workers, it's consumers. And when companies are taxed, they try to pass on the tax to each of these factors in different ways. And, several papers now show that a lot of that tax is now borne by workers. And so if you're trying to address income inequality, I think, trying to tax companies is exactly the wrong way to go. I also, one of the things you were discussing earlier is that it doesn't really tackle the issue of income inequality. It doesn't get at the question of why do low-wage workers have low wages? Is it skills? Is it the fact that they didn't get a good education, that they didn't get to, go to a good training program? I think this proposal doesn't really address that. It's a form of taxing and punishing the rich rather than really helping people at the bottom.
Sarah, I'd say that's the strongest argument.
I just find it,
bring wages up at the bottom.
I just find it amazing that we are still hearing these arguments about how lower corporate taxes will be good for workers. That was the argument leading into the Republican tax cuts. We've seen the evidence. What did they do with the corporate tax windfalls? They blew it on more than $1 trillion of stock buybacks to enrich their shareholders and their CEOs. Census just came out with new statistics showing that median household income has not changed. So I think we need to get beyond that argument. And the idea that, CEOs are these brilliant leaders and they deserve to make hundreds of times more than average workers, that's an argument I really thought we would have ended after the financial crisis. I was on Squawk Box in 2007, and I was ridiculed for criticizing the paychecks going to Wall Street CEOs, the same guys who then shortly thereafter ruined our economy. And so I had hoped that companies within the corporate world would have addressed this problem internally. They haven't. It's time for public policy to give the right incentive to companies that they need to narrow these obscene gaps.
Sarah, why would, if I'm a company and I pay my CEO less, why would I pay lower workers more? Isn't the wage of the workers below the C-suite determined by market forces and supply and demand of labor in those markets and not arbitraged by CEO salary?
This tax would just be one tool that is necessary to reverse our extreme inequality. We also do need policies to help balance the power of workers with employers. We need to make it easier to form unions, to bargain collectively. We need to put workers on corporate boards, other tools. But this is still an important tool to give the incentive to narrow those gaps, either by lifting up the bottom wage scale or bringing down the top. I hope that companies respond by doing both.
Aparna, what about a higher minimum wage?
So my issue with a higher minimum wage is, again, that you would basically be displacing workers with a higher minimum wage. We know that companies, again, have costs of hiring workers, and if you're raising those costs, the effects could go either ways. My personal proposal for helping low-income workers is to expand the earned income tax credit program. And, as the proposal talks about income inequality, I think a lot of there are several other good ways of helping people who are struggling to rise up the rungs of the income ladder, like good schooling, good education, good training programs, good access to social networks and jobs. I think we need to look for better policy ideas to fix that. And again, this idea of sort of trying to raise revenues by taxing rich CEOs or taxing companies, we had the highest corporate tax rates in the OECD before the Tax Cuts and Jobs Act, and we were still raising less than 2% of GDP from corporate tax revenues. So I think we need to look for other ideas to get money, and I think looking at broad-based taxes like a consumption tax or a VAT or other means of raising revenues would be a lot more effective in addressing the problem of income inequality than this current proposal.
Isn't one of the big problems that we just don't have tried and true programs for reducing inequality? If you told me there was a program where if I spent X, I could reduce inequality by Y, I would spend a lot of money on that.
Aparna just mentioned the earned income tax credit expansion is something that both Democrats and Republicans have talked about.
But if the issue is education or the issue is infrastructure, we can and should spend money on, at least those things we know we're underspending dramatically in infrastructure. What's interesting is that's a bipartisan thing that we can't get any progress on that. We could spend more on education, but the issues of people who are displaced from technology, people who are displaced from trade, we don't have very good programs in order to solve those problems.
Steve, Aparna, Sarah, thank you all for your time today.
Thank you so much.
Still to come, top stocks on the move as we get ready for the opening bell on Wall Street and what to expect as the fourth quarter kicks off. We'll talk markets and how you can come out ahead as we enter the final stretch of the year. We're back in a couple minutes.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet and scores.
What's happening in college football this week? This Saturday, two undefeated SEC teams square off to see who is a college football playoff contender. Number 10 Florida welcomes number 7 Auburn to town at 3:30 p.m. Eastern. Just search college to listen today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
From the TuneIn Studios, I'm Fonseca with your daily sports update. You can always reach me on social media. It's always at Fonseca Show. They get the latest and greatest. I'm always posting stuff out there. But remember, we've got NFL this Thursday night. We've got the Rams at the Seattle Seahawks. 8:20 p.m. Eastern is the kickoff.
Off the pro side. He breaks 3 down to the 5. He's in. Touchdown, Seahawks.
If you want to catch the action in that game, search NFL and favorite your team. That way you don't miss a moment of the action. That's your TuneIn Sports Update.
Under an hour till the opening bell on Wall Street. Dominic Chu joins us now with a look at some of the morning's biggest stock movers. Good morning, Dom.
Good morning, Mike. So let's kick things off with a look at shares of analog devices. Those shares are up around 2.5% or so, roughly 2,000 shares of pre-market volume. Analog gets up to an overweight rating from a prior sector weight, and the price target gets assigned at $130 thanks to KeyBank. Now, they've just returned from a trip to Asia. They did all their channel checks, and what they showed was that overall demand there still remains weak, but things are not getting worse, and they think this is a true bottoming out process that's taking place. Microchip Technology and NXP Semiconductor also mentioned positively getting upgraded to overweight there as well, so those shares up 2.5%. Next up are shares of McDonald's. If you take a look at those, their golden arch is seeing just around 30,000 shares of pre-market trading volume, up or down about 1.5% in the stock. Analysts at JP Morgan are reiterating their overweight rating and $230 price target, but they are reducing their forecast for third quarter sales growth at established restaurant locations due to what they say is a less traffic environment given fewer promotional pricing, so those shares off 1.5%. And we'll end on shares of Philip Morris, which are up around 1.5%, roughly 7,000 shares pre-market volume. The tobacco giant gets upgraded to a buy over at Bank of America from a prior neutral. The target price stays at $96. They cite, among other things, Philip Morris's lack of U.S. vaping products exposure, also the growth potential of their IQOS heated tobacco products, and an attractive valuation. So those shares up 1.5%, Wilfred. I'll send things back over to you.
Dom, as always, thanks very much.
Sure.
Now, ahead of the open for the first trading day of the fourth quarter, let's welcome Mona Mahajan, U.S. investment strategist at Allianz Global Investors. Mona, good morning to you. Thanks for joining us.
Thank you.
Snapshot, first of all, you optimistic for Q4?
You know what? We think there's some room to be defensive here. There's a few things that we're watching as we enter the fourth quarter. First and foremost, the trade situation. Two dates to watch there, October 15th and December 15th, both dates where tariffs are supposed to escalate. Number two, we're looking at what's happening with Q3 and Q4 earnings. While estimates have come down for this year, 2020 still looks optimistic. We could see downgrades in the future. And then finally, and last but not least, the political situation, geopolitical situation, not only here in the U.S. with the impeachment hearing, but in Europe as well with the Brexit situation coming to bear. So a lot of things, a lot of moving parts we're looking for and somewhat worried about.
How closely are you watching yields as to whether that impacts general risk sentiment?
Yeah, generally, what we saw in August was yields probably fell too far, too fast. Yields tend to be a proxy for not only what's happening in the U.S. economy longer term, but what's happening with the global rate sentiment. So our yields are being dragged down somewhat with the negative yielding bonds globally, but we're also looking at risk factors on the economic front. So when our yields kind of stabilized over the past month, it probably was an indication that some of the economic data and indicators have stabilized. We saw that come through. We're seeing the economic surprise indices stabilize. The question mark is, are we going to get that stabilization going into Q4 or not?
When you mentioned trade and potential for downside to earnings forecasts into next year, big question is, what's already priced into the market on that? In other words, are we, would we be terribly surprised if trade doesn't get solved in the next couple of months?
Well, you know what? I think on the trade front, there's less optimism, especially now with the geopolitical tensions and, impeachment overhang. I will say from the earnings perspective, 2020 earnings are still about 10%. And so if that starts getting downgraded to closer to 4 to 6% where we think it should be, we could see some volatility around that. And in fact, what we're looking at this quarter is, will the retail side of the business really hang in there like we saw last quarter with the Targets and the Walmarts outperforming, or will we see some downgrades on that front as well? And so that's important to watch, especially in light of trade and manufacturing. And
with trade, is it a big deal if we don't reach an agreement, or is it a big deal if the additional tariffs kick in and we start to see more and more kind of ramping up on both sides?
Yeah, I mean, the best case scenario is we would reach a deal and the tariffs roll back. That's probably the least likely scenario. Another good scenario would be if particularly those December 15th tariffs get pushed back further. Those are the tariffs that are really going to impact consumer sectors. Think apparel, textiles, footwear, toys. So really things that could impact a consumer spending pattern and holiday shopping season. We already had them pushed to December 15th. Right now we're not expecting a further pushback, but if that happens, that would be incrementally positive.
Are you focused much on impeachment possibilities, or is that not so much a factor compared to the election next year?
Yeah, the good news is markets tend not to really discount political noise until something material happens, especially that could be market moving. What we're looking at is, from a process perspective, it does seem like impeachment may not be likely once it hits the Senate. You need the 2/3 vote. That would require about 18 or 19 Republican senators moving over to the yes side, probably a low likelihood scenario. From a market perspective, could this have incremental impact on the headlines, volatility, but also incremental impact on trade? Are the Chinese looking at this and saying, what's our incentive to come to the table when there's additional political turmoil here in the U.S.? So That's probably the market impact.
When you say that there's room here for investors to be defensive going into the fourth quarter, how does that manifest itself?
Yeah, from our perspective, across asset classes, we're up in quality, we're defensive. From equity perspective in particular, we continue to favor that barbell approach. On one hand, the tech story is still interesting to us. It has long-term legs. The areas that we talk about, mobile payments, cloud, cybersecurity. But on the other hand, that defensive side of the portfolio, that includes your staples, your REITs, your utilities, parts of healthcare, just because they've lagged so much. But really important to, it's really helped investors over the last quarter in particular, and even beyond the equity side, areas like dollar, investment grade corporate bonds, even gold, we think is still interesting here. So a good defensive portfolio going into the fourth quarter makes sense.
Dollar is one of the big winners on Q3. How much does that weigh on earnings, do you think, Q4?
I think the dollar strength now could have an impact. It tends to have a 2 or 3 quarter lag impact, so we may not get it this year. But again, looking into next year, that's where we kind of see the downgrades coming from that. We continue to see the dollar being a flight to safety asset class. We think the U.S. relative, economic strength and relative even interest rate strength could support the dollar a little further here. So,
Mona, thanks for joining us.
Thank you. Great to be here.
All right, let's get down to the New York Stock Exchange. Jim Cramer joins us right now. Hey, Jim, how you doing?
All right, how about you, Becky? What's going on?
Oh, not a lot. I wanted to get your take on McDonald's today after the J.P. Morgan call that they think that they're not going to be coming in with numbers, comp store sales for the third quarter that are strong as expected. I mean, we've seen McDonald's knock it out of the park time and time again, but they're concerned about promotional activity and not being enough to bring in traffic.
See, my problem is that this is one of those tracking stories. They're using some alpha to track it, and there's not been necessarily a lot of correlation. I think Easterbrook's done a really good job. This whole sector is on fire. So I'm reluctant to just go against this thing because I think a year from now it's going to be much higher. A promotion that may or may not be working, I don't know. I mean, look, I like Yum best. I think Yum is the one that is consistent and has a low basis. I like a quick serve, QSR restaurant brand more than I like these guys. But then you have to include McDonald's, the big three. And I just think to get rid of it on this quarter is too hedge fund.
What do you think? And again, they've surprised so many times heading into the recent quarters. They could have anything up their sleeve. What do you think about Papa John's?
I mean, they're doing a lot of technology stuff. Oh, I'm sorry. What?
Oh, I'm sorry. Go ahead.
Well, they're doing a lot of technology stuff, but if you want technology, I think you go after Chipotle. I think Chipotle can go to 1,000. I think it's a really great stock here. And they've got a lot of good things in the pipe. And they finally have delivery all over the country, which is very meaningful. And the stuff travels real well. So I've dealt with them, and the expectations here, they've got a new item on their menu for the first time in a bunch of years. I think that one's working. That's the one you want to be at.
Tacos
I think
or the
that they have the best story.
What's their new item? The queso, the queso.
They have a carne asada, which is great as a burrito. We had it for Mad Money. I had it this weekend. The delivery, it was impossible, Manhattan. And now they're teamed up with DoorDash, and it's there almost immediately. There was no delivery in New York City that was worth anything.
We had the CEO of Papa John's on this morning, too, the new CEO, who's only about a month into it. He's got an activist investor who's been talking to him pretty frequently and in his office quite a lot. He talked an awful lot about what he's trying to do with these new guys like the DoorDashes and the Uber Eats and the rest of them, too. He's teaming up to try and make it so that both sides can get something out of it, so it's not a zero-sum game. What do you think?
Well, that's why Domino's has been hurt. Look, I was surprised. I talked to the activist there that there are very few ingredients in a Papa John's pizza, which is, the millennials like the label, and the fewer the better. And so I think that they've got a good story to tell. I thought that the guy's really very, very clever. I think that Shaq's really good addition. He loves stocks, by the way. So I like that story. I don't like Domino's because suddenly everyone's playing with these, DoorDash is willing to lose any amount of money because they're private. So I think that the deliver thing is a big factor. If you can deliver and DoorDash is willing to lose money on you, I think that's fantastic.
Okay. Hey, Jim, it's great to see you this morning, and we'll be watching.
Great to see you guys.
Back in just a few minutes, we'll have more of Jim. By the way, don't miss an exclusive interview that's coming up a little later this morning with UPS CEO David Abney. That's coming your way on Squawk Alley at 11 a.m. Eastern Time. Stay tuned. We'll be right back.
Can you customize the S&P 500 to meet your...
Our toy rollback is now on at Asda with hundreds of toys to choose from, like the Paw Patrol Mission Cruiser, was £44.97, now just £30. And the Barbie Ambulance was £49.97, now only £30. Perfect for treating your little princes and princesses. Bring it home with Asda. Selected stores online, subject to availability.
Today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
Jamie Theakston and Amanda Holden.
Hard breakfast. Tom Hanks is our special guest.
You're either being punished or rewarded. I'll let you decide.
I did do a whole show of grease on my front lawn when I was a kid. We charged everyone 10p. We raised a £5 and I gave it to Bishop's Waltham Gymnastics Club towards a new crash mat.
Do they get the crash mat?
I mean, it took a couple more years, but yeah.
It does happen to normal people like you. You've won £20,000. Well done.
I love this game.
Hard breakfast
with Jamie Theakston and Amanda Holden. Weekdays from 6:30. Listen on your radio, global player, or smart speaker.
Play hard.
I want Poppy to play cricket for England.
I want Sam to stop screaming.
I want Joe to live a little.
I want Naomi to live a lot.
I want Becky to invent a cure for the common cold.
Whatever the future holds for your children, Vitality Life Insurance want to make it happy, healthy and secure. So when you take out our Wellness Optimizer, you'll get up to 40% off your life insurance premiums.
I want the twins to keep on being happy.
I just want whatever the twins are on.
Just search Vitality Life Insurance. Additional product, minimum monthly premiums and conditions apply.
Schwab is eliminating U.S. stock, ETF, and options commissions. All the online broker stocks are getting hit on this news. It actually follows last week. Interactive Brokers went to a similar structure, zero commissions on those ETF and stock trades. So the race to zero in commissions is well on now.
The race to zero is well on.
Well on. There are a couple people already there.
They're already there, exactly. And everyone's going to have to get there, yeah.
There'll be, of course, some ways that they'll eventually still charge, whether it's an annual fee for the account or perhaps even a monthly.
They make money on the back end. Obviously, a lot of these firms are gathering assets. They're charging a fee on the account, or they're just making it on the trading side as they make markets in different stocks. But it's very interesting because for many years, the traditional online brokers, the retail brokers said, look, we charge $6, $7 a trade. The average trade size is $10,000. It's really not that big a hit, but obviously the pressure of a lot of the startups has been felt.
I mean, those are some significant moves.
Exactly.
TD Ameritrade down 14%, E-Trade down 13%. Does it really drastically change the business model?
Different degrees for different companies, and that's exactly showing you that right there. The Ameritrades and the E-Trades are more geared toward that per trade commission. Schwab is a little more of an asset manager, a custodian of assets, and Interactive already got that.
Yeah, the question, Mike, as you correctly pointed, is whether in 6 to 12 months there's a bit more rationalization between all of them and they make their margin almost as big as before, but through a bid-ask spread that's a bit wider.
I would say almost not almost as big as before. I think that's all automated up there. I mean, yes, you can make it up, but it shows you here that I think the fact that the stocks are getting hit, that there was a relatively cozy setup for a long time.
Mm-hmm. It's hard to imagine that it was a cozy setup when you think of where we were 10, 15 , 20 years ago and what those numbers were. And
Schwab used to be the cheapest at like $30 a trade,
right.
25 years ago.
Right. I mean, the other point, though, of course, like if you look at a Schwab, it's had a bad 18 months share price performance, but it had a fantastic 16, 17.
Getting hit also by the Fed cutting rates, and
right.
they're not earning as much on their balance.
Yeah. So, but it had a good run in terms of the market share and the way their market cap caught up with the falling market share of a Goldman Sachs, for example. Like those guys were in actually quite a good space. As you got more automation of trading, that was a structural thing that supported them, even if the fees on it came down.
Schwab, as an asset gathering platform, has done really well. Yes.
Let's take a quick look at the markets. We'll get one final check before we hand things over to Squawk on the Street. We've been looking all morning at the futures indicated higher. It is the first trading day of the quarter. The last quarter was a good one for both the Dow and the S&P 500. The NASDAQ was off slightly for the quarter. You see this morning, though, the NASDAQ up by about 29 points. The Dow up by 87, and the S&P futures indicated up by 9. That does it for us today. Make sure you join us tomorrow, and right now it's time for Squawk on the Street.
Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at the New York Stock Exchange. Welcome to Q4, getting kicked off with futures up nearly 100 amid this global bond sell-off today on the heels of a rough JGB auction. Europe is red on a weak PMI, 45.7. It's the worst in 7 years. Inflation there near a 3-year low. Our own 10-year near 175. Got the dollar index at a 2-year high. Our roadmap begins with questions about Q4. Investors weighing the trade war and an impeachment inquiry as the fourth quarter gets underway.
Plus, no force can stop the Chinese people. President Xi commemorating the 70th anniversary of the Chinese Communist Party's rule. This is violent protests in Hong Kong ramp up.
Plus, Facebook's Mark Zuckerberg rallying employees against critics, competitors, and presidential hopefuls like Senator Elizabeth Warren. First up, though, investors looking ahead as we begin the fourth quarter after a volatile Q3, which saw the Dow and the S&P extend their quarterly win streaks to 3. The Nasdaq fell just short of a similar run. For the year, though, leading the major indices with a 20% gain, S&P up almost 19, the best performance through Q3 since 97. Of course, we know this is all affected by the fact that December was so bad last year.
Yeah, I bet, for instance, Apple's up 42%. So you say, well, wait a second, it's a great year. But remember, Apple pre-announced. You know, the stock is going down, and Apple pre-announced. I mean, the idea that it's really up 41%, you have to look at all these to see what's up from the pal bear market. What is interesting is this market still has no leadership. It just keeps rotating. I mean, you know, drugs are a leader, and then Speaker Pelosi says, "Be careful the drugs." Managed care, and then you immediately get the single payer. You get technology, and then Micron pulls it. You see these packaged good stocks, and then one will be good, one will be bad. Retail, it's just watch. It's Walmart, Amazon, Target, Costco, and Home Depot, and nothing else. Nothing else. Right. So there is really just this. Wow, what do we do?
The most notable theme towards the end of the quarter was certainly the change from what had been focused on growth and momentum to value.
Totally. That's why the banks even went up.
That's kind of one of the key questions. Will that continue?
You're right. Well,
how much momentum will there be when it comes to these value stocks that have not gotten a lot of attention for a long period of time?
NXPI, you know, that's a value stock. Remember, it broke down. You covered it extensively.
127.50 was where they had a deal to be acquired, but of course the Chinese never ruling.
I know. Fabulous piece today about NXPI and how it's the backbone for the battery for EV. So, you know, you've got a tech stock. Is that an emerging leader tech stock? I don't know. Remember, Advanced Micro and Micron had been the emerging. So I just keep finding internally, every time I think we got something going, like Facebook, they rally. It's like, well, you know, Facebook was a great stock for a few weeks, and then Facebook's awful. And I think a lot of it's by Washington. It's by Washington.
Well, market's gone sideways ever since the trade war escalated. WTO today, again, for the third consecutive year, cuts their global growth forecast, largely because of trade. They see world merchandise trade 1-2.
Wow.
1-2.
And that drives money toward Lennar, which has been a fantastic performer, towards Pulte, which has been good. KB had a remarkable quarter. KB Homes. So, I mean, the mortgage rates going down has actually spurred some housing. But that's, again, while housing punches above its weight, you know, how long is that leadership going to last? Right. I mean, I just find there's no leaders that last.
What do you think Q4, I mean, seasonally strong?
Yes.
Right? Fed's in a much different place than it was last Q4. Does that help?
Don't fight the Fed, don't fight the tape, as the late Marty Zweig always said. And I see it that way. I did expect that there'd be more mutual fund selling. That's second to last week of September. Remember when September got overbought? When it got overbought, we had this big slide, but now we're not overbought. And the beginning of October tends to be pretty good. And then there'll be a couple of months where people say, oh, we'll do anniversary of crash stories. Tends not to rally on anniversary of crash stories, but October's been a pretty good month.
Well, you'll also have IPO weakness and repo madness to throw in the mix.
Yes.
Right? Make people a little more jittery.
Reefer madness. I do wonder, we're so Pelotoned. My wife wanted to say, listen, it's not sports bra. Okay, it's not. It's Lululemon that hangs on the Peloton.
Oh, it's Lululemon.
Yes,
she corrected you.
It's not sports bra. That is Jim, you should never mention that. Is wrong. So I want to correct myself. Shouldn't have said sports bra. Sorry, Lisa. What I really meant to say was Lululemon. So am I clear now? Do you think I'm better?
Yes.
Better at home with that?
But we did spend the end of the quarter talking a lot about the poor market for initial public offering.
Yeah.
I think poor is a nice, easy way to say it.
Why don't you
It's
smile?
not well received.
Why don't you smile directly at me?
That was one of the worst.
But
yeah, that was one of
the IPOs. We're done. Just say no. I'm working on a piece tonight for Mad Money. I know the president pulled the plug on the theory that maybe we'll pull the plug on Chinese IPOs. I think the president should do it just in order to protect our wealth.
Do what?
Stop with the Chinese.
Not allow listings by Chinese companies.
The performance of these is so horrible that Peter Navarro would have had more ammo had he come on and talked about that yesterday in that interesting interview that he did with Squawk Box.
You don't think what happens to the fund managers who have billions in these names? What happens to them? These names would be
because of the MSCI index. Yep. Henry Fernandez said more. Another reason why you have to be just in the S&P. I just really feel that the MSCI decision to make it so that you had to be overweighted, which is something that Navarro talked about. He mentioned Goldman Sachs. It was actually his MSC, the company that said it. That said that China should be allowed in kind of the regular, League of Nations, but the Chinese don't have the disclosure. Navarro was right about that. The disclosure, I'm looking at the disclosure, they don't tell you a lot. Like of NIO, that stock that, stock went to 10 on a 60 Minutes piece, and is it 2? It's a car company.
Jefferies comes out today. The move would completely undermine the international market and would harm the U.S. role as a conduit for international capital.
Please. It'd save us a lot of money.
No, it wouldn't.
What?
Come on.
Oh, come on, nothing.
Come on. If people want to choose to invest in these, they can choose to do so. You want to maintain the U.S. capital markets.
Oh, happy 70th! Happy 70th to you. Hey, Sunshine, happy 70th to you.
I'm just saying.
Really?
Alibaba, you don't want any part of that.
Alibaba,
by the way, we can't get Tencent. You got to buy it over there. It doesn't list here.
Alibaba has U.S. financials. A lot of the companies that have come public, David, do not have typical finance. I just don't think that we should allow in our country IPOs.
So then short them. Make money that way.
They're hard to borrow.
All right.
Why if you want to bring a U.S. deal, WeWork, you think that wouldn't sail right through the SEC? If it was from China, it would. Can you imagine? The Chinese WeWork.
I'm sure there is.
What would that be like?
Likely.
Would they serve mezcal instead of tequila?
That we've got for everything. What?
How's WeWork doing with that new team? You know the guy. One of the co-CEOs?
Marty Minson.
Is it starting to come together?
Cable. I think they've got a tough road ahead of them.
You think so, huh?
Yeah, well, when you're losing, $1.8 billion a year, you've got to cut. You're going to burn through, $700 million bucks. You got...
The Journal says they have enough cash to get through Q1. Their bonds this morning yielding 11.
Yeah,
11,
no,
it's
nice. When WeWork could ever actually anticipate coming back or trying to come to the public markets is...
Yeah, that's a question.
Mystery wrapped in a riddle.
An enigma.
Covered by an enigma.
Yeah, I think that it's an ill-advised deal that they'd bring to the market.
So they've got to, but maybe they're going to find all this stuff to cut they'll suddenly realize, hey, you know what? We're not losing nearly as much money as we thought.
They give away the tequila collection. Maybe he has some of Vicente Fox's own tequila. You don't know.
Who knows?
President of Mexico apparently has great tequila collection.
You would know, although you're a mezcal guy.
No, I mean, this WeWork is all part of this era of please. Save us from WeWork. Give us more McDonald's. Ooh, yikes. McDonald's, the guy. What does he know?
We're going to get to that call. Bad call out of
McDonald's ad's terrible. It's terrible. What? Where the guys, obviously something went bad. Everyone's watching a game, and then the guy goes, ooh, and he likes the McDonald's thing, and everyone else is mad. No, I mean, if we're going to sit there and watch hours and hours of football, I want good commercials.
JP Morgan, by the way, says Q3 comps are trending below consensus. They expect them to disappoint once McDonald's prints. That's why it's red today.
How do they know? They use some tracking organization.
Yes. Channel checks.
Yeah, what are channel checks? Come up with. You think that they have a channel? What are you doing?
I'm texting. Important news people are in touch with me at all times, and I need to respond to them.
I got important people myself. I'm going important people.
I promise. I listen to you out of this year, and with this hand, I'm doing something else.
He's multitasking. I think the McDonald's call is not a call I want to sell McDonald's off of. That's a classic hedge fund call. You sell it at 211, you buy it back at 213. That's what the pajama traders do. Do not do. I don't like that trade. I know we have to move on, but that kind of trade, that kind of call is. Never mind. That kind of call is a really tough call for individuals to do.
And you would say this even if the call were that it was trending above consensus.
Easterbrook is doing a very good job, and he's instituting a series of technological advances But it is Chipotle that you want to own. And that carne asada.
Really good.
Oh, my, yeah. Didn't you think it was
very
fantastic?
Nice. And you're in and out of there. I've started timing
my God.
My time spent in the store. It's under 60 seconds.
It's amazing. Now, yesterday I said we got to have the carne asada, and my wife said, no, it's only in New York, they only deliver from 45th. By the time it gets there, it must be from Omaha. They started DoorDash. It was at the house like this. It was at the house as long as it took the Redskins to fall behind.
Saw the New York Times had a story on Grubhub today, though, New York restaurant owners being upset with how much they're taking.
Oh, my
another
God,
question
they take everything.
And talking about actually similar things that you experience in terms of pages being created that you weren't aware of.
Oh, my God, DoorDash. So DoorDash says that they're our provider, but actually we made a deal with Caviar for 25%. Then DoorDash buys Caviar, and now we're up a creek without a burrito.
Tough business, as we know. Meanwhile, guys, Mark Zuckerberg is rallying the troops in a leaked audio of a meeting with Facebook employees obtained by The Verge. He slams Senator Elizabeth Warren's call to break up the social network.
Like Elizabeth Warren, who thinks that the right answer is to break up the companies, if she gets elected president, then I would bet that we will have a legal challenge, and I would bet that we will win the legal challenge. So does that still suck for us? Yeah. I mean, I don't have to, have a major lawsuit against our own government. I mean, that's not like the position that you want to be in when you're, it's like we care about our country and like want to work with our government to do good things. And but look, at the end of the day, if someone's going to try to threaten something that existential, you go to the mat and you fight.
It's tough to understand. The audio there, he says, we'll go to the mat. If she tries to break us up, I would bet that we will have a legal challenge, and I would bet that we will win.
Well, this is that new form of antitrust, which reminds me of the old form when Standard Oil was too powerful. This is Facebook's too powerful, let's break it up. That's a different form of antitrust than we're used to, which was our prices going up because of monopoly.
Right, and in this case, they're not, so you still have to deal with the actual law.
Well, the law, David, the doctrine's pretty clear. You do not go after companies because they're powerful. And that's against the doctrine.
That is right. I think in interviews that I've done with the antitrust DOJ chief, Makin Delrahim, he's made that point.
I know.
You have to prove anti-competitive.
Right, but, Senator Warren would... it would be a different regime if Senator Warren came in. A lot of people are talking about...
It would be a very different regime in a lot of different ways, yes. We know that.
It would be... Would she allow us to do what we do?
The three of us?
I think so.
I mean,
we talk about stocks. I mean,
if she tries to stop us, we're going to the mat.
We are going to the mat
too.
David,
Zuckerberg.
Or we only let it do bear case.
Or the mattresses.
Yes, David, ETFs are going, this. We go to the mattresses.
Yeah, I think we'll be okay.
But no, the fear of Senator Warren is getting overblown.
Oh, well, it's Sanders who raises $25 million in Q3, the most of any Democratic hopeful so far.
I can't stop getting Sanders' email. I got 5 Sanders emails yesterday. I mean, between the first game and the second game, I got, just give me $2.83. I mean, it cost me $2.83 to read his ill-advised email. The guy does spam. He gets you no matter where you are.
Well, he's going to be around for a while with that kind of cash balance.
He's going to be around forever. Yeah. But I want to stop the fear of Senator Warren. I really think that that's a mistake. I think that there is such a thing called Congress, and I also don't think she's nearly as anti-business. I also think that some of these FANG stocks are so bad, I wish they'd break them up, like Alphabet.
Well, that conceivably could create a lot of value, some say.
There are big companies that are against what Alphabet does.
No, yes, including one we know very well.
So I like how you just teed that up for him.
Yeah.
You're like,
so he doesn't have to
big
say
companies.
Reports about Comcast.
You're like Trout.
There's a lot of information that a lot of companies have taken in terms of what they believe is somewhat anti-competitive behavior. What Snap did with Facebook, you just do that in the course of business, and maybe at some point you have an opportunity to use it.
It's called business. What kind of thing did Walmart do to 99% of the small businesses in this country? And no one said a thing. That was fine that Walmart could destroy all the small businesses. Because what? They're benevolent? They're from Arkansas? What is that about?
It was an issue. It continued to be something of an issue.
Senator Warren might bring that up.
It's a little late.
You're an impossible burger to deal with.
Thank you. That's one of the nicest things you've ever said to me.
We are going to talk to Casey Newton of The Verge about that story regarding Facebook and that audio of Zuckerberg. We'll get Kramer's Mad Dash, countdown to the opening bell as the futures still look pretty good here as we're watching rates around the world as well. Back in a moment.
This CNBC program is...
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
Get ready for Brexit on the 31st of October. Brexit will bring changes that affect businesses in many ways, particularly if you buy from EU suppliers, sell to EU customers, provide services to EU clients, and receive customer data from other businesses in the EU. Businesses need to prepare. Find out how at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $1,049. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
You're a small business owner and there's nothing small about what you do. That's why Dell Small Business Technology Advisors give you trusted advice and tailored tech solutions, like computers with Intel Core processors, servers, storage and networking, plus industry-leading monitors and software. No matter your technology needs, Dell is here to help your small business do big things. Call 0800 085 4878 to speak with an advisor today. That's 0800 085 4878.
We spoke to the Cans from Sly about what BT's new complete Wi-Fi brings to their busy house.
Now the Wi-Fi literally does reach every corner of the house. We have 11 people that all use the Wi-Fi for different things, and the Wi-Fi disc has helped that so much.
The harmony in the house has improved 10 or 20-fold.
The Cans are 11 more happy BT customers with complete Wi-Fi that guarantees a Wi-Fi signal in every room.
Up to 3 discs to guarantee Wi-Fi or £20 off your bill. Terms apply.
We're trading here in 12 minutes, but first let's get in a mad dash as we count you down to that opening bell. Let's talk a little Emerson.
Yes.
Company out with an announcement this morning at 7 a.m. Clearly a response, though they don't say it that way, to an activist in their shares. In fact, what may be even more than one activist from what I hear. But D.E. Shaw was outed by Reuters late on Friday. They are there without a doubt. I think they've been talking to management, but we haven't heard from D.E. Shaw either.
Well, you know, David, one thing I learned when I was at Goldman in the 80s was to sell a lot of credit cards. Was that Emerson is the one industrial you never sell. Why? Mr. Knight ran it. Because it's the one that's best run. And you know what's amazing? They're talking about some of the parts breakup. Emerson was always the opposite.
Who's they talking about some of the parts breakup?
This is a Deutsche Bank piece about what the sum of the parts is. Okay. They see 12% upside, $74 in some of the parts. David, the idea that this company is some of the parts rather than just one of the best run industrials, it seems like they're after management.
I believe that is probably the case.
Mr.
Now,
Farr.
I don't have a great sense yet as to what they've been asking for. My sense here is it was done a bit prematurely. In terms of it coming out in the markets that they were there and perhaps weren't quite ready. But we get an announcement this morning, Jim, from Emerson saying they've concluded, following discussion with their board over the course of this year, they've concluded that a thorough review of their cost structure, capital allocation, and portfolio will inform decisions that drive strong value creation for our shareholders in what we expect to be an uncertain environment.
But isn't that what they do anyway? Isn't that what you do is you evaluate and think about the uncertain environment?
They go on to say they anticipate a challenging geopolitical and economic landscape over the next couple of years and are focused on ensuring they're well positioned to drive out performance and shareholder value. They do go on to affirm their full year 2019 GAAP earnings per share guidance.
That's a big deal.
360 to 370, Jim. But kind of a weird little press release here. Didn't really say too much, but obviously a response to some of these reports.
Emerson and 3M, 3M may argue with this because it's say Asia, but Emerson's the growth from Emerson is from China. A lot of it is from China. So this has been a play that a lot of people think, like Caterpillar, is dependent upon a trade agreement. These guys are saying, that I believe the actors say, you can't just be trade agreement, non-trade agreement.
Right.
This is one of the great performers of all time, but it is not.
Is it time for FAR to go?
The stock's been underperforming.
Okay.
How was that for an answer?
Very diplomatic.
Right?
Very much.
And how often am I Jeffersonian like?
Hardly ever.
Thank you.
You're welcome. You're welcome. You were dead right on that WeWork, though.
I was good on WeWork.
Day one.
Hey, how am I doing on Juul? I ain't be Juuling. I'd rather drool and Juul. That's what they're saying.
By the way, just in case you weren't aware, we are a podcast.
Get out.
Yes, we are.
But you don't work on a podcast because most of the things you do are just silent to me, make me look like an idiot. It's like Charlie Chaplin.
Oh, I am here to try and make you look like an idiot. But listen to us because, well, every day you can do it.
That's why
just go to CNBC.com/podcast.
Listen to us because you should listen to us?
Yeah.
Wow, that's a real wow. Where'd you learn that?
I'm really good at this.
Rune Arledge? Is that from Rune Arledge?
Man himself.
The jaws of victory.
This is Miguel.
Hola.
Today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen with amazing savings on Samsung fridge freezers at Currys PC World, like the RB31 with its chilled water dispenser for only $3.99, or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space at just $104.9. How relaxing at Currys PC World. Energy rating A+. T's and C's apply. The relaxing sound of fresh, cold running water. And you can have it in your kitchen with amazing savings on Samsung fridge freezers at Currys PC World, like the RB31 with its chilled water dispenser for only $3.99, or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space at just $104.9. How relaxing at Currys PC World. Energy rating A+. T's and C's apply.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
These are the top buzzing stories on TuneIn.
Alex Rodriguez did 3 dress rehearsals before proposing to Jennifer Lopez.
My assistant Ashley played Jennifer, and we rehearsed this 3 days in a row, Monday, Tuesday, Wednesday. Now on Wednesday, it rained.
Sarah Jessica Parker is open to a Sex and the City revisit.
I think, to do some episodes of Sex and the City, that those characters never talked about social media, which I just think would be really interesting.
Those were the top stories that are buzzing on TuneIn.
Futures green for this first day of October and the fourth quarter. Plenty to talk about. We'll get Kramer's playbook for the next 3 months. Talk about what the week might bring, because it's far from over. We're back in a moment.
Tonight, America's favorite college football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet and scores.
What's happening in college football this week? This Saturday, 2 undefeated SEC teams square off to see who is a college football playoff contender. Number 10 Florida welcomes number 7 Auburn to town at 3:30 p.m. Eastern. Just search college to listen today.
Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in
the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow @TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Opportunities aren't always obvious. Sometimes they just drop in. CME Group can help you navigate risks and capture opportunities. We enable you to reach global markets and drive forward with broader possibilities. CME Group, how the world advances.
If you want to know how you could get gold without having to break in here, then listen up. Because thanks to Monex, a trusted name in precious metals investing for over 50 years, you can get free gold. Monex helps you acquire premium gold products to help you diversify your portfolio, whether you're an experienced investor or a novice investor. And for a limited time, new customers who buy at least 20 1-ounce gold coins from Monex will receive a 1/10 ounce gold American Eagle coin for free. Call us now, and you'll receive a free investor kit just for calling that will tell you more about the diversification properties of gold, along with the many other benefits it can provide for investors. Don't pass up your opportunity to get free gold. Call Monex now.
You're watching CNBC Squawk on the Street, live in the financial capital of the world. The opening bell in about 3 minutes. Busy morning as we kick off Q4. One thing I want to touch on before we get to stocks is this JGB auction. We never talk about JGB auctions in Japan, but it did spark a spike in rates all around the world.
Well, I don't know how it's possible. I mean, but yeah, the fact is that I've been waiting for these all to fail.
Auctions to fail. It was the worst since, 2016?
Yeah. No, it wasn't worse than was that the worst? 2011.
Worst auction in 3 years. Yeah.
3 years. I mean, what are we doing? Like, a lot of these countries should just be buying our dollar, which, because we know the dollar's the strongest, then buying our bonds, because we still have overinflated short-term rates. Why do people participate in these auctions where you know you're going to lose money? What kind of fiduciary would ever just say, you know what, I'm going to lose money?
Well, some of them have an obligation to own a certain amount of this paper.
Counting on the Bank of Japan to continue to inflate its ownership
and deflation has been something they've seen for a long time in Japan. That said, negative rates kill your banking system.
Right.
Kill your banks.
They do.
So you got to figure out a way out of it. Now the Bank of Japan seems to be somewhat more focused on that.
Well, did you see the Eurozone? Their inflation rate? Oh my God.
So Eurozone inflation is near a 3-year low, and their PMIs at 45.7, weakest since 12. Germany weakest since 09.
These are all big trading partners of China. China's at the epicenter of all this because the Chinese have a slowing economy. And, you're not going to get it from them. The 70th, they have some real good weapons they unveiled. And then, meantime, you have Hong Kong. We don't even talk about enough Hong Kong.
Hong Kong's a mess. The protesters there being shot with blue water cannons. The Hong Kong police have confirmed that one protester was shot by a live round. As the 70th anniversary of the modern China government is today, markets are closed for a week. Xi Jinping making some public appearances in Beijing.
But did you see who congratulated them? The president there had some positive news.
Said congratulations on 70 years.
70 years.
70 years of communism. Way to go.
Chinese people on 70th anniversary. Wow. I don't know. Why did he do that? Oh, sorry I asked. I mean, why did he do that? I mean, maybe his good friend Xi, maybe we settle this over a golf game? There's some real issues. We didn't gotten the fentanyl stopped yet. When are they going to stop the fentanyl?
Something to talk about when they get here in about 10 days.
Yeah.
There's the opening bell. S&P 500 at the CNBC Real-Time Exchange. At the big board, it's Old Republic International, an insurance holding company. At the NASDAQ, it is Papa John's International, the third largest pizza delivery company. And we know how big a category pizza is
They're doing better.
Restaurants.
Remember, the big one, I think, the big change is Yum. Yum is doing better, and that's been a terrific stock. By the way, in my playbook of what you do, you buy these stocks that have been unbelievable performers, like a Yum. Wow. Chipotle, no stopping that one now. Hey, you know what? I had talking to Carl during the break, I happen to have the Tyson chicken nuggets that are plant-based. Now, they're not ready to be released yet, but I have to tell you, I defy you to tell me that they don't taste better than a regular chicken nugget.
Really?
Yes, really. I mean, they were just fabulous.
Right.
What?
I mean, a chicken nugget's mostly corn anyway. Because the chicken just eats corn.
But this doesn't have any...
It's mostly bread, which is actually probably got chicken, corn...
It's plant-based. It's
corn?
Like if you're a vegetarian, you know?
Corn's a vegetable.
How about the Impossible ad where they really have people who say, hey, you know what? This tastes like a hamburger. Well, no kidding. That's the point. It's got GMOs, though. Millennials hate GMOs. Millennials don't like commissions.
They don't like paying commissions.
No.
As Schwab now is going 0 commissions, effective October 7th. They say it's going to cut revenue 3 to 4%.
That was big.
Seems low.
That was big. You know, but you think it's all... I mean, I just think that any number cut in this environment is just brutal for a stock. Look at Micron.
It is.
They really didn't do that much to...
This Schwab, I mean, it's pressuring everybody in the...
It sure is. It sure is. That's just something
Ameritrade, E-Trade, everything's down.
That is something that,
you know. Look at Ameritrade.
Wow.
Oh, my.
Holy cow. That's incredible. Wow.
Schwab should do that every day. They put them out. Send those other stocks down to 0. Can they go negative? Maybe they can go negative. Pay you to do trades.
Oh, you mean like the JGBs?
Yeah. Schwab will pay you to do trades, and then Ameritrade will be trading at $20.
I mean, but how much of it is Robinhood? Which is, you know, I had Robinhood on when I'm in San Francisco. The millennials love Robinhood because you don't have to pay commission. Ow. That is ouch.
It starts, October, in a week, I think, right? October 7th.
I'm not allowed to trade, but holy cow. You could really wham a jamma if it's for free.
That's quite a move.
You can't make that up in volume, David, when it's for free.
Say again?
You can't make it up in volume.
No. No, you can't. But it does show you the competitive landscape.
Yes.
They're feeling that they need to respond to what's going on, amongst others, as you say, Robinhood, or others that continue to lower. And the value of actually just having the balances there.
Well, Schwab has that great bank. Remember, Schwab's got that. It's a machine in terms of how much the credit balances. Yes. Goldman's trying to have those big credit balances. Got to see how that's doing.
And I mean, we talk about Schwab. People may not realize it's a $51 billion market cap company.
It should be.
Yeah.
Jeez, it's going to pass Goldman for market cap? Wouldn't that be something?
It's not that far. I mean,
hey, you know what's making a comeback that you guys haven't talked about much? Ulta Beauty.
Yeah, we've been noticing that once again on the leaderboard today.
A lot of feel that it can't last this downturn, and you go back over that quarter. I deal with a lot of people who are in the hair care and perfume business, cosmetics. No one can understand why they did so poorly. I think they're coming back.
Corn's a grain, by the way. I knew that. I want to make sure.
We're talking about Ulta Beauty.
What about Ulta?
It's coming.
I know it is. You were talking about it coming back.
What program are you watching?
I'm watching this one.
Well, you should put us on periodically. We have a lot of good things.
Are we on television? No, we're a podcast.
We're a podcast now. Primarily a podcast.
David. McDonald's they cut the commissions at McDonald's, David.
We were mentioning this leaked audio out of Facebook that The Verge has today, in which Mark Zuckerberg says they would fight an attempt to break up Facebook, says it would suck for the company. Elizabeth Warren now responding says what would really, quote, suck is if we don't fix a corrupt system that lets giant companies like Facebook engage in illegal anti-competitive practices, stomp on consumer privacy rights, and repeatedly fumble their responsibility to protect our democracy.
Jeez. I never thought you could use the word suck on air. I guess that takes care of that. This again is the power of companies. Now, I think that we talked last week about Facebook comes in and does Instagram stories, does Snap Idea.
Yes.
I don't know if you remember Nelson Peltz at Delivering Alpha said, hey, listen, we'll steal people's ideas. I mean, what's the problem? Why can't Zuckerberg just say, listen, we're going to do what Snap does? What's the matter with that? What's the matter with that? Why can't he?
Well, if somebody created a rival TV show and had a lightning round, you might have a problem with it.
Someone's doing that on the NFL Network. I'm not kidding. It's on the NFL Network. They're doing exactly the lightning round. I felt like going after them, but I said, like, with what? Hey, guys, cut that out?
It depends on the IP in particular, and whether it's defined as something.
You don't like it when the Chinese do it?
Yeah.
Well, the NFL's more powerful than China. NFL's more powerful than anything, right?
They are powerful.
The NFL's not perfect. Perfect.
Yeah, I saw he's tossed for the rest of the season, including the playoffs.
Well, that was a great
bad hit.
That was a really great hit.
By the way, on Facebook, Adam Mosseri of Instagram is going to be on the Today Show tomorrow.
Oh, really?
Talking about apparently some changes to the Instagram feed, so we'll watch for that.
I hope that maybe they'll back the businesses that are all doing great stuff on Instagram. You remember a lot of businesses. I think you do it. You open a site on Instagram, then you immediately go to
you're able to buy within the app.
Yeah, and then you go to Spotify, and then you go to Amazon Web Services, and next thing you know, you're a business.
Yep.
Holy cow, have you ever seen this stuff? Like, we're buying stuff. I was talking to Dow Chemical. The Glad bags. No, you got reusable bags. I saw them on Spotify. It goes right to your house, and you put them in a dishwasher.
Jim, speaking of names like Ulta that are trying to come back from a big drop, you tweeted today on Roku, feels like a shanked punt.
Yeah, because it's
dangerous.
What
does that mean?
Well, it's just like you can go anywhere. It could be something like Brian Westbrook runs back against the Giants. Deshaun Jackson runs up against the Giants. I just feel like that you don't know. Roku is just, you don't know what's going to happen with Roku. Because you don't know whether Apple TV, boy, they ran a lot of Apple ads.
The ads on every NFL game. Yeah,
wow, they spent
10 minutes.
Apple was for the moment there. Remember when Budweiser used
Disney Plus has a pretty powerful ad
but that's Roku.
campaign going as well.
I know, but you don't know. Roku is, maybe it costs, look, we have to find out how many different things millennials are willing to watch. We don't know.
By the way, the only beneficiary right now of all these streaming services is network television.
Are the showrunners of Stranger Things?
The ads.
New 9-figure deal for season 4?
That's where it's all ending up. All these digital companies spending enormous amounts on the old platforms.
How about Dish, where I have to watch these advertisers about, we don't drop us, we'll drop you.
Well, they're right. They're
what the hell is that?
They're fighting with
That sucks. Meanwhile, Apple, because Tim Cook made a comment in Bild, B-I-L-D, David, that's a German publication, saying that sales are strong. That is completely the opposite of all the slagging that he's getting on Wall Street.
What about not being given tariff relief on some of these Chinese components, even though they're
on the Mac,
they're building the Mac?
On the Mac, I thought for sure that was, you got to talk to Lighthizer and Navarro, because I thought that was a done deal. That was incredible.
Stock doesn't seem to care.
Switcheroonie McFadden, David. But look at this Apple. 233. If that, I don't think you can take out 233.
Well, you were out yesterday, but JPM took their December 2020 target to 265.
I know that was important. These are important. Look, if Tim Cook is if he's saying that more than it's just like a good launch, I think the 11 is rippling through. It was a very low expectations. The 3-camera on Instagram is so powerful. It's like a $1,700 Nike camera. It's that good.
It's that good, right?
And not only that, but you saw the ad where you can pulverize and you can put it in water. I mean, when my wife threw in the 7 by washing it, and we had, thank God, the prenup continued. It says you can't do that, and it's okay. But it is amazing to me that this new one, you didn't think it was funny? There's no prenup. Never mind. The new phone being able to withstand and also have the camera, I think the 11 is doing much better than expected. My channel checks that I do, which are actually real, indicate sold out, sold out, sold out. Sold out. Sold out watch, by the way. Sold out watch.
The Series 5.
Yeah, the Series 5 watch, which allows me to press a button and David disappears. I transpond him over the NASDAQ. Puff! Puff!
Is that something you'd like to do?
What? No, I like
you. The viewers now think that you really want to do that.
No, I like you.
Or the podcast listeners.
I like you. He's a good guy. Likes his dog.
Oh, I got a good guy. That's what I get out of you? A good guy after all these years?
Hey, listen, Sunshine. You should be glad I threw that at you. It's Larry Culp's 4-year anniversary.
Yes, it is.
And what do you think?
I think GE's still below 9.
The insight you're bringing to the show is really important.
Listen, GE's got a hard road ahead of them. It's part of the power you can make a lot of progress on. Obviously, the industrial business is doing okay. However, the insurance part of the business, just dealing with that,
care?
Jim, long-term care.
But the Kansas regulators
you just got to wait. You just got to.
But wait till the people die. Actually, that's what long-term care is about. It's waiting for this vintage of people. They use that word. I don't mean to use that. But they use the vintage of people who got those policies, and you're trying to ameliorate those policies. But you're talking about a policy you paid very little, and you're spending $200,000 a year in home health, and GE's on the hook. They're trying to mitigate.
They are, and you'll continue to, but it just takes time to really work.
I know, and that's part of the reason why 2019 is a reset year. So we're waiting for, if TUSA hasn't, maybe TUSA wishes Culp a happy birthday. Oh my God, is that TUSA should do a happy birthday piece from JP Morgan?
Is it birthday or anniversary? Anniversary of his taking over.
Instead of birthday?
Right?
Okay, anniversary.
1 year.
All right.
Anniversary.
Got to move on.
Yeah.
Apple is leading the Dow, to your point earlier, Jim. As we're back to 29.90 almost, let's get to Bob Pisani. Bob?
Yeah, heading towards 3,000 pretty fast, and it's a cyclical rally by and large. Take a look here what's going on. So we have semiconductors up nicely today. That's Apple helping things out. Retail, metals and mining stocks, banks, these are all cyclicals here. And, of course, defensive names like utilities are lagging. That's a pretty good sign overall. Just let me show you Apple and the Apple suppliers because he's right. We're right near a 52-week high. Not there yet, but near a 52-week high on Apple. And here's some of the Apple suppliers that are all up nicely. Of course, comments from Tim Cook that the new iPhone 11 sales off to a very strong start. Those are his words here, all helping the market overall. So we're starting October. The problem with right now is we're kind of in a wishy-washy middle phase. There's nothing really tremendously oversold or overbought. If you take a look at some of the things, utilities have had an amazing month in September. They're a bit on the overbought side. Oversold, not a lot. I see metals and mining have been sold rather aggressively going into the end of September. Biotech was sold rather aggressively. And some of the recent IPOs, we've covered that one pretty well. Let me just show you what happened in September for some of the IPOs that have happened in the last 3 or 4 months. So CrowdStrike, PagerDuty, Chewy, Pinterest, all had terrible months. Most of these 20% or more declines happened in the last 2 weeks of the year. The IPO ETF, as we mentioned, moved down to the lowest level since February there. I thought it was very amusing. You could tell the venture capitalist market is kind of concerned about how IPOs have been doing. There's been reports that some of the venture capitalists have been trying to convince people over in California who are considering IPOs to use direct listings. This is an interesting idea. I agree the cost of IPOs is high. It can be 4 to 7% of the proceeds. The results can be uneven. It can be annoying and disappointing, but just point out here that any kind of direct listing does not guarantee that anything nice is going to happen. If you look at Spotify, remember the reference price that we use? It's not a price. They use a reference price, was $132. Now we're looking at what, $114? So that's not up. If the other one that was a direct listing was Slack, and that was $26. That was the reference price that was used there. Slack's now at $23. So I certainly agree. Alternatively, you can use a direct listing, but you're not raising money, and there is no guarantee that that's going to perform any better for the company overall. Let's talk about what happened with the e-brokers. Jim mentioned this very briefly. This is a rather surprising outcome if you consider what really goes on, how these companies really make money. So Schwab is eliminating commissions for stocks and ETFs, but look at how these companies actually make money. Schwab is essentially a bank. Take a look here. It gets almost all of its revenues from net interest revenue, 57%. It's a bank. Asset management is 32%. Trading revenues is only 8% of the company's revenues. In other words, the company can essentially afford to drop some money on trading revenues, providing it keeps its customers and its continuing ability to scale up. Now, there is a lot of competition out there, not necessarily from the e-brokers. There's other people that are poaching the territory. JP Morgan's got You Invest out there, these low-cost brokerage firms. We've got Bank of America with low-cost brokerage. Robinhood is out there. We know all sorts of competition that's out there. It's not dramatically eating into the e-brokers yet, but the key thing here is keep the customers in-house. Schwab's been very successful with their ETF platform. They're now one of the big 5. That's been working. So don't lose the customers, even if you have to cut the prices. That's the key right now. Guys, back to you.
Bob Pisani, thank you very much. Let's get to the bond pits as well. Rick Santelli, as we have ISM Manufacturing on the way. Rick?
Yes, we do. We have that on the way as well. And maybe the most important thing, and everybody's been talking about, you guys have been talking about it today, and that's weak PMIs, weak inflation, and all this in Europe is very important because we're in this kind of race to the bottom. What's the first thing you read when you hear these stories? Is that the dollar is strong, hasn't crossed over 100 since April. But that is the issue. Will we follow? Look at how these patterns are so uniform. Here's our 10-year since the end of August. And I picked the end of August because the move that started there that we're retracing about halfway, you'll see it on our 10-year chart. You see it on Boone's. And maybe the pattern's a little different, but here's a French 10-year, same pattern. Here's a Canadian 10-year, same pattern. Here's an Australian 10-year, same pattern. By the way, Australia lowered rates today, historic lows, and their 10-year now is under 100. And even though all the rates may differ, at the end of the day, the fact is we're all moving together, and policies are going to start to ramp up because the European Central Bank didn't do enough when they had a chance, and now as Christine Lagarde comes in, welcome to the show. And as for the dollar index I mentioned earlier, it is getting ever closer to 100, and I'm sure this administration doesn't like it. Some exporters say they don't like it, but at the end of the day, we probably should like our data better than many countries whose currencies are weaker along with their economies. Carl, Jim, David, back to you.
All right, Rick, thank you very much. Got big news in the world of college sports, of course. Yesterday, California becomes the first state allowing college athletes to profit from endorsements. Governor Gavin Newsom signing that measure into law, despite the NCAA calling the move unconstitutional. David's been working this a bit here, David. Fascinating.
It's a fascinating story, one that we've sort of followed in a sense in terms of the ability of amateur athletes to get paid. Some of these kids obviously are really at the college solely to play sports. They can't get compensated, the small group of them, that their uniforms might be used in various ways. The colleges make money from them. But the NCAA has raised the prospect of a boycott of these California universities. And my understanding is, at least according to a number of antitrust experts and other sources, that were that to be the case, that you might very likely see action from the DOJ Department of Antitrust saying, hey, you're acting as a monopoly.
Wow. Now
right?
that's a real
You're
monopoly.
in coordination around the country. And so the NCAA better think long and hard about whether it wants to try to implement some sort of boycott here in response to Mr. Newsom's signing of this bill, Governor Newsom's signing of this bill, because it does appear that they're going to have to think about the possibility of the DOJ.
The company announces a new stake. We're going to talk with the CEO. As Dow's up 124, and we're back within 10 points of 3K.
The Bond Report is sponsored by PIMCO.
Hi, John and Pete Najarian here. You have to see this. These are the recent stock and option returns you could have made using our strategy to follow the smart money. The money from Wall Street's elite, who have the massive resources to get market information before the rest of us. Their unusual option activity tells us what they're starting to trade. Our strategy uncovers why they're trading it and how to follow along for the biggest return. It works for stocks and options, and it's the #1 way we choose our trades. We talk about it on TV, and many of you have asked how you can do it too. So we laid out our strategy in our newest book, revealing things we've never revealed. And today we're giving away some copies for free. All you have to do is cover shipping.
Prefer video learning? Get John and Pete's DVD for free too. Call 1-800-392-9696 or go to followthesmartmoney.com to get your free book and DVD. Call 1-800-392-9696 or go to followthesmartmoney.com now.
Let me tell you something. I wouldn't be here if I thought reverse mortgages took advantage of any American senior. Or worse, that it was some way to take your home.
Learn how homeowners are strategically using a reverse mortgage loan to cover expenses, pay for health care, preserve your portfolio, and so much more.
A reverse mortgage loan isn't some kind of trick to take your home. It's a loan, like any other. Big difference is how you pay it back.
Find out how reverse mortgages really work with AAG's free no-obligation reverse mortgage guide.
With a reverse mortgage, you can pay whatever you can when it works for you. Or you can wait and pay it off in one lump sum when you leave your home.
Discover the option that's best for you. Call today and find out more.
I'm proud to be a part of AAG. I trust them. I think you can too.
Call 1-800-725-1966.
Sure, a resume is a great way to see someone's experience, but you're not hiring a resume, you're hiring a person. That's why Indeed offers tools that help bridge the gap between a candidate and their resume. Like skill tests, which let you actually see a candidate's abilities in action to make sure they're a good fit for the job. It's no wonder Indeed delivers 3 times more hires than any other job site. See beyond the resume with Indeed. Get a free sponsored job upgrade on your first posting at Indeed.com/offer.
As investors collectively try to bake in all sorts of contradictory possibilities, the repricing ebbs and flows, and you see intraday rallies as people realize that businesses are actually pretty good, and the stock market remains the best place to put your money.
Got 2 companies with market caps above $1 trillion, Microsoft and Apple. Apple, though, trying to catch up as it now hits 227, almost 228. We'll get Stop Trading with Jim in a minute. Dow's up 107.
Johnson & Johnson is a baby company. But we're also a company that controls HIV, fights cancer, repairs shattered bones, relieves depression, restores heart rhythms, helps you back from strokes, and keeps you healthy your whole life. From the day you're born, we never stop taking care of you.
Hiring is challenging, especially for a pivotal role.
It definitely felt like we were looking for a needle in a haystack.
So Dylan used ZipRecruiter. He posted his job, ZipRecruiter sent it to over 100 top job sites, and then matched his job with qualified candidates.
We were very impressed with how quickly we had quality candidates apply through ZipRecruiter. It's very important that we choose the right people, and ZipRecruiter's been able to help us do that.
ZipRecruiter, the smartest way to hire. Try it for free at ZipRecruiter.com/index.
Technology and the future of work. November 4th in San Francisco. CNBC's At Work Summit. Top CEOs and tech leaders reimagining the workplace. Go to cnbcevents.com for tickets. Sponsored by Workday.
This is Kate. Hey. She takes 2 prescriptions. Kate's son Jack takes 1 too. Kate works hard and thought she had good insurance. But she still pays too much. That's no good. So Kate downloaded the GoodRx app. Now she can compare prescription prices to find the best discounts. She even beats her insurance price. Good for you, Kate. Good for you. GoodRx. Stop paying too much for your prescriptions. Download the free app today.
You went to college? You're smart. So why are you getting ripped off on your student loans? At Credible.com, we've helped tens of thousands of people save money by refinancing their student loans. In 3 minutes, we'll get you actual rates from multiple lenders. We could save you hundreds of dollars a month by refinancing to a lower rate. Don't get ripped off on your student loans. Let's focus on your future, not your debt.
Visit Credible.com and in 3 minutes, see how much you could save.
Time for Stop Trading with Jim.
You know, Carl, David almost always asks me in your absence, what's the key to this market? It's Micron. I'll tell you why. Micron, when they reported last week, just crushed the market. And we had Sanjay Mehrotra, and he was talking about how, listen, the forecast's not that great, but 2020 is going to be terrific. It's buying back. It's going to another $7 billion in stock here. If this stock can hold, all of those semis that are running will continue to run, and you'll have your leadership group from now till the end of the year.
Semis.
Yes, but Micron has to hold. Wow. Because, boy, that group is just a coiled spring.
Jim, what's tonight on Mad?
You know what's up the most? The utilities. And Con Ed is up more than 20%. How do you like these German, Japanese bond buyers? this is a bond. It's got a 3% yield. This guy McAvoy's very sharp. And it yields, it's up 20%. That's incredible to me. So risk-free, 20% versus what? Lose 1% because you're banking on the government? That's some trade, huh? Schwab, you can trade what you want, David.
All you want.
All you can eat. All for
Ameritrade's down 23%.
That's impossible, Bert.
Jim, we'll see you tonight. When we come back, ISM, can it hold about 50? Plus an exclusive with the CEO of U.S. Steel. Don't go away.
For thousands of years, owning gold has been not just a symbol of wealth.
Today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
Only on Dave. We have taken the titles of famous, intellectual, proper lectures and asked our guests to write their own versions.
I'm Ed Gamble, and I suffer from unwanted arousal. Every wrestler has got to have a good catchphrase. Wayne! And the dirt is gone.
The least harmful of lies is the white lie, because even language is very racist.
It's comedy for the brain. Comedians giving lectures tomorrow at 10 on Dave.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
These are the top buzzing stories on TuneIn.
Alex Rodriguez did 3 dress rehearsals before proposing to Jennifer Lopez.
My assistant Ashley played Jennifer, and we rehearsed this 3 days in a row, Monday, Tuesday, Wednesday. Now on Wednesday, it rained.
Sarah Jessica Parker is open to a Sex and the City revisit.
I think, to do some episodes of Sex and the City, that those characters never talked about social media, which I just think would be really interesting.
Those were the top stories that are buzzing on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
MLB is right here on TuneIn.
A swing and a drive to right field. That's it. Well, Ramirez back, and that ball's gone.
And to find it all, you need to search MLB on TuneIn.
By the wall, out of here.
Home and away calls are a click away on TuneIn Premium. Make sure to follow TuneIn today, so you're always in the know. Twitter, Facebook, Instagram. Just search @TuneIn.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Welcome back to Squawk on the Street. I'm Carl Quintanilla with Leslie Picker and David Faber. Let's get right to ISM and Rick Santelli. Rick?
Yes, our September read on ISM manufacturing sort of going the way of Europe. 47.8. Definitely a bit below the 50 we were looking for, sequentially following 49.1. And the issue here is 49.1 comped us back to January of 16, where we had 48. Obviously, 47.8 usurps that. So we're going way, way back in the Wayback Machine. That takes us back to June of 09. June of 09 to find a lower level. And if we look at the employment component, move from 47.4 to 46.3. Prices paid, they moved up, but not over 50. They moved from 46 to 49.7. Fascinating. And new orders, 47.3, fairly lateral move from 47.2 last month. All these, of course, are now under 50 in contraction mode. But to be fair, we all know that trade, of course, is affecting this data series. It's not over. August construction spending expected to be up in the neighborhood of 0.5%, is only up 0.1%. which is exactly what it was up last month, which stands unrevised. The response in the marketplace is coming. We're definitely looking at yields moving a bit lower, and that does make sense as we consider how much Europe, of course, was affected by their weak data points. So we'll continue to monitor all that as interest rates. Dollar index is still up, but it's lost a little bit of its upside. Leslie, back to you.
All right, Rick, thank you. Our roadmap today starts with stocks rallying on the first day of Q4. What investors should expect heading into the end of the year?
Plus, Hong Kong protests turned violent on this 70th anniversary of China's Communist Party rule. We'll take you live to Beijing.
And an exclusive with the CEO of U.S. Steel. We're going to talk trade, competition, and this latest deal to acquire 49.9% of Big River Steel.
All right, so stocks trying to hold on to their gains after that ISM number as Q4 kicks off. What is the playbook for the rest of the year? Joining us this morning, Citi's Private Bank Global Chief Investment Strategist Stephen Whiting is here, and Cantor Fitzgerald Global Chief Market Strategist Peter Cicchini. Guys, good to see you both.
Good morning.
All right, so we couldn't hold 50. What does it mean?
Well, manufacturing globally is contracting. The U.S. is not immune to that in any way. Fortunately enough, if you take a look at the last core retail sales reading out of the United States, over 5% growth. Took a look at Germany, over 4% growth. China slowing, 7%. So at least right now, we have this gap between a growing demand-side economy around the world, low inflation, and importantly, easing central banks to outlast this manufacturing contraction. But this is what they should worry about, and this is what we should protect.
You're worried about duration here now. How long this lasts?
We have to outdistance this contraction in manufacturing, which is in part a function of the trade war.
All right, so it all comes back to makes October 10th and 11th more important, right, as these talks kick off?
Yeah, no, trade is clearly a factor and an issue here. But let's be clear about this. The rollover in global ISMs began far in advance of the trade war. And this has been progressing over time. It was a second derivative change that we identified in mid-2018. Now, trade exacerbated that rollover. And our argument for some time has been precisely that U.S. ISMs would follow global ISMs into contraction, whereas many of my peers disagreed with my team and I. It has happened. And we're actually starting to see the consumer weaken a little. That's been the sole pillar of strength that the bulls have been resting their hat on. You know, personal spending was weak on the last print, and retail sales have frankly been quite volatile, and we're starting to see lending standards start to tighten to the consumer. And last point here, yes, the Fed is in a mid-cycle ease, but history shows very clearly that does not prevent economic slowdowns, and moreover, there isn't much room for the Fed to act this part of the cycle.
So what's your focus? What's your expectation then for the consumer, if you're citing at least what you believe is the beginning of some signs of weakness?
Yes. I mean, look, our job as strategists is to try to identify that inflection point, as difficult as that may be, because by the time the data goes deeply into contraction, it's too late, right? Markets have already reacted. So the focus on the consumer is, does this consumer still have access to credit? Because let's be clear, real wages have not grown the way they have in previous recoveries. They've been growing at about 0.8%, which is it's well below what you should be seeing.
And the question is what central banks around the world, and especially here in the U.S., will do to react to that, and what kind of firepower they have with regard to a potentially weakening consumer, weakening manufacturing sector.
Well, let's bear in mind that the U.S. consumer is going into this manufacturing slowdown with a personal savings rate at 8%. It's going in with a record low consumer debt burden, and we're looking at things like housing and consumer durables, not having like this massive top in it. So we don't have just tremendous exuberance in the broader economy. We have healthy fundamentals, very much in contrast to some corporate fundamentals in a few particular areas. And so if we have low inflation, we have easing monetary policy, yes, there will be some manufacturing slowdown impacting those same workers. But we overall can hold this together. Whether this is a recession regime or a slow growth regime is really the question, and there's a big difference between them.
You just said savings rate 8+. We know about 12 months expectations. Are the gaps widening between current condition and the future? What makes you think spending is going to hold in?
Well, I think that we have the inertia behind us of the sharp improvements in labor markets and the things that typically happen, right, when you have a central bank that's ignoring the signs of a downturn when you get an oil shock, 1991. You see what happened in Saudi Arabia? This is not being transmitted to consumers. And I think that when we take a look at an easing central bank now and the Federal Reserve's lending standards survey, you can see that there is no crash here going on in the availability of lending to consumers. So I think we will hold in. There will be a slower outlook. But when you think about markets reacting already, we now have the world's lowest historic interest rates. Again, we've gone there a good deal now in terms of taking down expectations. Not perfect, but we've gone a long way.
Others would say S&P has become a defensive asset, right? So if we can bang out 1% to 2% in this global environment, all the money's going to come up to us.
Yeah, listen, Carl. I mean, this is typically the way things play out. There is a rotation of capital flows into the U.S., typically late cycle. That's not unusual, especially with interest rates as low as they are. Dividend yield on the S&P exceeds pretty much everything else. But here's the thing. Equities are not a risk-free asset, okay? And that, I think, is the misperception amongst a lot of global investors. Equities have risk. They react to the economic cycle. And unless we don't think we have economic cycles anymore, then I think equities are probably mispriced to the cycle risks that are right in front of us.
All right, well, we got that number, and we're going to get the first earnings print of the quarter this week, too, and then jobs Friday. So we'll be talking again soon. Thanks, guys.
Thank you.
Thank you. Hong Kong protesters taking to the streets with demonstrations turning violent on China's 70th anniversary of Communist Party rule. Let's get to Eunice Yoon live from Beijing with more. Eunice.
Thanks so much, Leslie. Well, the events marking National Day in Hong Kong and here in Beijing couldn't be more different. Here in Beijing, the day was all about pomp and pageantry. We saw a military parade and then a speech by President Xi Jinping. And then finally, the day was capped off with a gala this evening, which had 60,000 people gathered here on Tiananmen Square just moments ago, including President Xi Jinping. Now, President Xi Jinping had made some comments about Hong Kong, but in Hong Kong, the situation was tens of thousands of people who were marching through the streets, protesting rule by the Communist Party. And in fact, the violence got so bad that two protesters are now in critical condition. One of them, a teenager who was shot by police with a live bullet. Now, as I said, President Xi Jinping earlier at the parade had made a veiled warning to Hong Kong, stressing the importance and the commitment of this party to one China, the one China principle. Otherwise, though, the messaging from President Xi was that China is great again. In fact, at the parade, he said that no force can stop the Chinese people and the Chinese nation forging ahead. At the same time, President Xi had reiterated that the rise of China is going to be peaceful. That was in contrast, though, to the military display of hardware that we saw, including an intercontinental ballistic missile known as the DF-41, which is said to be able to go as far as any target in the United States. This was the first time that Beijing unveiled that particular missile. Now, for investors, there was very little in the speech about economic reforms or the trade war or China's international role in the world. And that's been suggesting to many that investors should just expect that Beijing will continue on this path of having a very nationalistic as well as hardline stance. And in terms of the trade war and the trade talks that are supposed to happen next week, this whole pageantry really is the backdrop for Vice Premier Liu He, who is scheduled to be heading to Washington and to have conversations with his U.S. counterparts. But because he is coming off of this massive Communist Party, it really is going to be difficult for him to be able to be seen as making concessions to the U.S. when the whole day and the messaging from Beijing is that Beijing and the Communist Party is not a weak party. Guys?
Eunice, thank you. Eunice Yoon reporting from us, of course, important part of the world right now. I want to quickly touch on some big moves, though, right back here. They involve online brokers. Take a look at the losses. Charles Schwab announced this morning that it is ending commissions for online trading in stocks, ETFs, and options. It's going to do so, I think, within a week. It is suffering, but its competitors even more so. As Papasani pointed out earlier, the revenue from commissions, not nearly as large as asset management and other parts of its business, is clearly designed to respond to some competitive pressures in the market from some smaller players. But the worry, Leslie, is that others are going to have to follow suit.
Yeah,
Ameritrade, as you see, losing almost a quarter of its value.
Yeah, I think the red that you see on the screen there is just indicative of this race to the bottom and the commoditization that we're seeing in terms of commissions on trading these types of things. And it's completely reshaped the business models, as you mentioned, that asset management just becoming increasingly more important.
All right, guys, when we come back, don't miss a CNBC exclusive interview with the CEO of U.S. Steel, David Burritt, as the company expands its footprint with a new deal announced this morning. Dow, of course, did turn negative on that ISM number at the top of the hour. Negative contraction in new orders, jobs, and prices, and the worst number at 47.8 since 2009. Back in a moment.
Each day, our planet awakens. At Harefield Hospital's private facilities, we provide short-notice heart and lung appointments whenever you need us, along with advanced diagnostics and pioneering treatments with our leading experts. Whether it's a heart or lung health screening, or to see one of our expert heart and lung consultants, we provide you with specialist private healthcare, quickly, expertly, and conveniently. Book a private appointment today at Harefield Hospital by visiting rbhh-specialistcare.co.uk.
Every day someone dies waiting for a transplant. From spring 2020, the law around organ donation in England is changing to allow more people to pass on more organs to save more lives. Unless you choose to opt out or in an excluded group, all adults will be considered as a possible organ donor when they die. Whatever your choice, make it clear to your family and closest friends to ensure your decision is honoured. To find out more, or for the choice to opt out, visit organdonation.nhs.uk. Pass it on.
Jamie Theakston and Amanda Holden.
Hot breakfast. Tom Hanks is our special guest. You're either being punished or rewarded. I'll let you decide.
I did do a whole show of grease on my front lawn when I was a kid. We charged everyone 10p. We raised a fiver and I gave it to Bishop's Waltham Gymnastics Club towards a new crash mat.
Do they get the crash mat?
I mean, it took a couple more years, but yeah.
It does happen to normal people like you. You've won £20,000. Well done.
I love this game.
Hot breakfast
With Jamie Theakston and Amanda Holden. Weekdays from 6:30. Listen on your radio, global player, or smart speaker.
Play hard.
We spoke to Nigel and Paulette from Lincoln about BT's complete Wi-Fi.
The boys' bedrooms are both in the attic. They do a lot of gaming, they do a lot of streaming.
Yeah.
They get the same strength of signal now in the attic that we get downstairs.
It was always dropping out, and we don't have that now. The children still get frustrated when they lose at things, but that's completely different.
Nigel, Paulette and the boys are 4 more happy BT customers with complete Wi-Fi that guarantees a Wi-Fi signal in every room.
Up to 3 discs to guarantee Wi-Fi or £20 off your bill. Terms apply.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Welcome back. Its name is a lot bigger than its market cap, but it still has an important place in the U.S. economy. U.S. Steel this morning reaching a deal to buy a minority stake in Big River Steel. It does have the option to take complete control of the company over the next 4 years. David Burritt is the CEO of U.S. Steel and joins us now. Nice to have you here.
Great to be here. Thanks for having me.
Why did you do this deal to buy 49.9% of Big River?
This is a transformative action that we're taking right now. It gives us the best of the integrated mills and now the best of the mini mills. So in effect, we're combining the two types of businesses together and creating this type of footprint that will enable us not to just compete, but to win in the coming years. So this is a very great transaction for us because we're now being thought of as a technology company because of what we get with Big River, which is high-tech, best in breed, and the mini mill business.
Now, some would say, well, what took you so long? I mean, the mini mills have grown in capacity, I think, from some 15% to as much as 70% since 1970 in terms of steel output. I believe you guys haven't built a new hot strip mill since 1965. Shouldn't you have moved a little faster?
Well, maybe you've heard it's a difficult industry, right? And
I have.
We certainly have made some progress. If you think about going back just a few years between the Great Recession in 2013, we were losing a couple $1 million a day. And now here we are investing for the future. Last year, for example, was the best EBITDA year since 2008. So clearly we're in a lot better path than we were before, a lot better place, and we're investing for the future. We've invested here in the United States with a new electric arc furnace that'll be completed next year. We're investing in Europe with a dynamo electrical steel line. We're investing in our hot strip mill in Gary Works and a state-of-the-art, by 2022, endless casting and rolling, best North American mill will be created, which has, again, the best of both, the integrated and the mini mill technology, and that'll happen, we'll complete that in 2022. So with Big River and what we're buying there, we're buying talent, we're buying expertise, and we're creating this relationship that, again, creates the best of integrated mills and the best of mini mills.
Well, as you mentioned, you come off a strong year last year. We had the introduction of the 232 tariffs put in place, I think it was March of 2018. The price of steel went up, the industry benefited, but this year has been a very different story as demand has declined. And I believe steel prices are below where they were prior to the 232 tariffs.
They certainly are.
How tough is it out there right now? We just got an ISM manufacturing number that didn't look very good either.
Well, it is a difficult time. The geopolitical issues overwhelm, in fact, the economy right now. And I think, obviously, we're going through a difficult time across the whole world as we find our way through what's going to happen here. Europe's struggling, of course, and the tensions between the United States and China will certainly continue for a time. But, I have to tell you, I'm extraordinarily optimistic about the future.
Why?
We'll get through this for U.S. Steel because we are, as I said, the best of both. But also, I do believe we'll get to more fair trade. We'll get to a USMCA agreement. There'll be an agreement with China, and we will get through this rough patch. And, there will be at some point an infrastructure bill coming. We need it. It will come.
We all know we need it, David, but
it
will, but not anytime in the rest of at least this term and or until the election, one would think.
Well, we'll see when it happens, but when it does, we'll be ready because we have now best of breed, best of integrated.
Right now you're dealing with a slowing auto industry, a strike at GM. I mean, the near-term future doesn't look very good.
We've been around for 118 years. We are a resilient company. We have a resiliency plans in place. We will adapt, and we'll do what's necessary to make sure that we have a good future. And with this investment, it's going to be even better.
And you are talking about it, achieving as much as $1 billion in capital and operational cash improvements by 2022 as a result of the deal. I wanted to ask you, you say through activities such as rescoping asset revitalization investments. What does that mean, rescope asset revitalization?
We've had big investments in terms of revitalizing our assets and bringing them up to world-class type standards. And what we do over time is we reprioritize. So with this investment, we'll be able to dial that back, maybe $200 to $250 million more, to put in other priority assets to make sure that we get the best value for that. And we'll also look at other aspects of our business, including our iron ore assets, which have the low cash cost in North America. And so what we can actually do is for the excess pellets that we have, the taconite pellets there, we can monetize those assets over this time as well to create this opportunity. But from my perspective, I've been at U.S. Steel now for 6 years. I've never seen a better time than where we are right now in terms of where we're headed in the future because of these building blocks that we've put in place. Our balance sheet has been much better shape than before, and we have committed financing to do this deal with Big River. So
we understand that. And do you expect, as part of the deal, you have the option, obviously, to buy the remainder, the other 51% essentially of Big River?
Absolutely.
Do you expect that is going to be something
absolutely,
that happens?
We see that we will consolidate this, and we're going to build capability with this. We're buying an organization that's highly entrepreneurial, and what they're bringing to the table is the high tech. And that's something that we'll benefit from. And we'll marry that up with the integrated mill, the best of breed at the integrated mill. Bring those together. So it's going to be a beautiful marriage ultimately.
The stock is responding positively today, and we can see there what you're paying, $700 million for that stake. But overall, a $2.3 billion enterprise value for Big River if and when you do, as you just said, take full control. But I'm curious, the stock is cratered, as has the market value of the company, as steel prices have dramatically declined. Yet you sit here very optimistically. What do you tell investors?
Well, we tell them about what a great investment this is. We tell them about what a great investment we have in Mon Valley, Pennsylvania, $1.2 billion that we're going to have in place for 2022. We tell them about the great technology investments that we're making in the hot strip mill in Gary, Indiana. So all of these investments are coming together, and over the next 3 years, we'll be in a lot better shape. We know how to weather storms, and we'll get through this.
Right.
But
again, for years, the industry had complained about cheap imports. That has ended, correct? That era is over, fair
I would
to
say the era is
Dumping?
not over until we get the fair trade agreements. We need USMCA. That will come, and the administration is working through those situations, and China has massive excess capacity. We have a level playing field. We'll compete with anybody. These issues will take some time. They'll get done. Meanwhile, we are investing for the future, and we're proving that we can actually have a good business.
Are you concerned at all that if there is some sort of agreement finally with China, that in fact steel will be a part of it in the sense of advantaging China again in some way, or taking down these 232 tariffs?
Well, I can't really speculate what's going on. I'm not part of those negotiations, but I can tell you this. If we do have fair trade, it's better for us. Meanwhile, we're going to invest in the future and do what we do best, make steel.
Mr. Bird, appreciate you taking some time with us. Thank you.
Well, thank you for having me. I really appreciate it.
David Bird, CEO of U.S. Steel. Carl.
All right, David, when we come back, the world's most profitable company, Saudi Aramco, stepping up its push to investors, laying the groundwork for a potential IPO. We're going to talk with a former company senior executive next as we check the averages here. Dow down 155, still responding to that disappointing ISM number. S&P's back to 2964. Squawk on the Street continues in a moment.
The problem with traditional cotton sheets is that they trap heat and moisture.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply. The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $1,049. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
From the TuneIn Studios, I'm Fonseca, the Daily Sports Update. Major League Baseball wildcard action for the American League. We've got the Rays at the Athletics. This one's going to be Wednesday at 8:09 p.m. Eastern. How are the teams feeling?
It's really amazing. It's just a special day. More importantly, we get the win and in a crucial time, and we battle our butts off today.
Now, if you want to catch that game, search MLB at your TuneIn Sports Update. These are the top buzzing stories on TuneIn.
Alex Rodriguez did 3 dress rehearsals before proposing to Jennifer Lopez.
My assistant Ashley played Jennifer, and we rehearsed this 3 days in a row, Monday, Tuesday, Wednesday. Now on Wednesday, it rained.
Sarah Jessica Parker is open to a Sex and the City revisit.
I think, to do some episodes of Sex and the City, that those characters never talked about social media, which I just think would be really interesting.
Those were the top stories that are buzzing on TuneIn.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Welcome back to Squawk on the Street. Investors were chasing safety in the third quarter. The utility spider, ticker XLU, reflecting the top performing sector in Q3. Energy, the biggest laggard. The XLE down about 7%. Both WTI and Brent are in bear market territory as these tensions between Saudi Arabia and Iran remain in focus. Joining us this morning is the former Saudi Aramco executive Sadat Al Husseini, founder of the Husseini Energy Company. It's great to have you back, Doctor. Good morning.
Good morning. Thank you.
I wonder, can you reflect with us on what prices have been able to do in the face of what we thought was going to be at least a bit of a supply shock?
Yes, I think Iran had a plan to create a real shock by taking out over 6 million barrels of Saudi Arabia's oil. But the excellent reaction, the very professional reaction of the operators at the Abqaiq plants in Kuwait were able to put the facilities back on stream real quickly. They had an excellent emergency response. They sidetracked some of the burning facilities, used excess capacity, and I think they're back in line and producing over 11 million just now.
We still have a lot of observers saying we're in a new chapter of defense, of low air defense, and the technical ability of these drones to attack facilities with very little warning. How much do you worry about that going forward from here?
Well, it is definitely a very serious challenge. I think the big picture, though, is what you need to look at. Why are we having these attacks? What's the purpose? Obviously, there's nobody with the technology in the Middle East region anyway, other than Iran. And so